All right, hey everyone. Today we're going to jump into support and resistance. Um, Support and resistance is quite simply the most basic topic that you'll encounter in terms of trading, and it can really be looked at as the baseline for everything else, for trend, um, for supply and demand, even in paired with Fibonacci. So it's important to have a good grasp of support and resistance and not necessarily overuse it moving forward, because what you'll find is that just quickly, a lot of people you'll get a chart that looks something like this, where, and I'm on the weekly chart right now, but I'm literally hitting every wick, every little inch of, so that jumped to not what I wanted, every little inch of support and resistance. And while that's all well and good, and if you have a system that works, which we'll get into, um, that's fine if you want to have your chart become that overwhelming. But when you look at something like this, there's no there's no rhyme or reason to, once you get into this level, this type of trading style, like, there's no rhyme or reason to what you're going to trade and what you want to trade. Now, trading just support and resistance works great for a bigger time frame on swing trading forex, and it also works great for intraday stuff on the um, on the indices. I guess I can't minimize that, so we'll just go back to the indices here. So what I'm going to do is I've taken two pairs that nobody chose as their own, being the Euro Aussie dollar. I didn't give that one as an option because it's not a Nadex pair, so I wanted to stick with the majors, and the CAD futures, which nobody chose. I don't know if I gave that an option, but I wanted to stay away from what you all had chosen. Um, and all I'm going to do is just run through and do some basic support and resistance, but I'm going to explain and annotate as I'm doing it. And I want to see you all afterwards. I want to see you all get towards. Sorry, just give me 1 second. I'm trying to get rid of these rollover lines. And I'm not entirely sure why it won't clear. Not that important. But I want to see you all take two of the one futures pair and one forex pair, and I'll explain this towards the end. But I want to see you do similarly to what I'm going to do here, and I want to see your explanation. Now, support and resistance let's start with forex. In its simplest form is just areas that are either tested numerous times and held as a zone, or are areas that trigger significant reactions and price reversals in the market. So when you're looking at support and resistance, I make it a point to start left to right and read like a book. So this is as far back as we can go. Here's the first level that I see was right on the bottom there. The second level is right at the top. Now, this is something that gets a little interesting when you look at price like this, right? So you've got an area that could be classified as a little zone. And if you want to leverage support and resistance zones over support and resistance lines, that is perfectly fine. So if you want to draw something like that, and then you want to change the coloring so that you know you're not looking at supply and demand, and instead you've got a little bit of a price reversal zone, that's perfectly fine. I encourage it because it'll be easier for you to gauge where your stop loss is going to go, especially on a swing trading type of account. Um, And then if you look, now you don't have to go ahead and mark off and figure out which is the best zone to mark off here, which is the best little area to mark off. Instead, we can focus ourselves more on the points that stand out. So now we've got, in a matter of looking right or reading left to right for less than a quarter or less than an eighth of our chart going forward, we've already got 3 significant and decent zones. But what you want to make sure you're not doing is overwhelming yourself with areas or with too many areas on your charts. Now, actually, I can up that zone a little bit to the top of that wick, and all I'm going to be doing is just making sure that I'm inclusive of everything in this little 3-wick span over on the left-hand side. Sorry, mouse was snapping. So now the zone's a little bit bigger. You can see that this level front run just a little bit, but it's still held. And now I can start to go through and I can start to plot out some of the more intermediate stuff. So what I want to make sure that I'm doing is keeping track of the color coding. So I know that rose reddish, I guess, I don't know what color that would technically be, hue is anything weekly. And now I can look for areas that have either been tested numerous times or areas of significant price reversals. Here we've got a little bit of both, right? If you're reading left to right, this next little dip down, where does it truly close below this level? You can see that these wicks, because we're swing trading and because we're on a weekly time frame, and because we're looking for areas of reversal and we're not looking to be super exact, that's fine. We don't need to mark off these wicks as another level of support and resistance. If we were on the daily or on the 4-hour chart and price hadn't progressed much past where it is now, then you might want to consider marking off this zone like this, and then you would have had another price reversal zone right there. You would have had a decent support level. But for our purposes, because we're on the swing trading time frame now, we don't necessarily need to do that quite exactly. Now you can look left and you can see here that where I just marked off was held once, twice, 3 times, 4 times, 5 times, broken 6 times, 7 times, 8 times, 9 times, and it just held again just recently. So we got a nice dive coming out of that level just recently. Now keep in mind that's a weekly chart, so that's a significant chunk of change right there. But it was all predicated off of a zone. And what I like to do with little ranges that like this that were broken and retested is make it as solid and up the size so that it's a boundary almost. We don't have a true range high really, kind of in this little zone. It would technically be that zone that we initially gave, or we could look higher. That might technically be it, but it wasn't tested multiple times. So that to me right now is just a significant level. But it's not necessarily something that you want to bold off. Now we get to, so we're coming out of this zone here. We're still reading left to right. And while this was a significant price test, if we look right and we if we move backwards and we look towards this little area right here of range high, well, there are a couple of zones that held pretty significantly. And you can see it all kind of sticks within this level. Let's see, I'll use these. Kind of sticks within this level here. So you could do one of two things. You could use this as, it's a strong wick up. If I zoom in, it's a strong wick up and then a quick rejection off of it. And then if you look to the right, it held multiple times. And you could, this is all personal preference, because then if you look right, we've got another range high that held a bunch of times. So you could leave it marked off as 2 separate levels, or you could take, if you look where that look where that second range high was established. It's pretty much right at the start of the bear move coming out of that strong rejection. So you could do it one of two ways. You could have a zone like we have just above at price reversal zone, or you could leave it as two separate levels. Me personally, when we start to get towards that mid boundary range bound stuff, right? So we've got our upper boundary, we've got our lower boundary. We're now kind of trading within this range. I don't necessarily like to have a super strong level that makes it. You can see it just makes it appear a bit more clouded and a bit more constricted. So if I give myself that room to run and have that black space behind it, it makes it a little bit easier to read. Here, on the other hand, if we look at this range low, you can see that we've got a nice spike down, and these wicks hold. And then, so again, we're reading left to right. We found our low here, but we could theoretically use that if we look right at these zones and we want to incorporate those wicks. So here's where it was initiated. Here's where these wicks, you can see that there's definite pressure towards the downside there. But I want to leave that as the area that I'm going to look for the bodies to test and close above. Well, now we can change this. Now that we are looking left to right, and start at that red line and then find the low of these wicks as they move through, or as we move right. So that would be technically there. And then you can see we've got a nice reversal zone here as we break and retest. But I'm going to leave that thick red line as the indicator that it's a boundary low for me. So now if we look, now we don't necessarily, especially on a weekly time frame, there's nothing here that signifies strong reversal or multiple tests. Looking right, we've got pretty much everything covered. And here's a pretty clear run straight down. There's nothing that, here you could make an argument that there's a brief period of support and resistance, but other than here, I wouldn't really, that wouldn't be significant to me, because that's just mid-move. That's a nice little range run down. Then we start to get to where we've broken below, and we start to get these areas that are holding as it's still trending down, and this can become tough for support and resistance, despite the fact that it is the most basic. You could make an argument for right there. We come down, and this is the area that we have a significant turning point and a nice bull pop. But coming out of that level, we just retest, and then once we break down below here, we start to sorry, let me zoom in a little. Oh man, I just lost it. Let me zoom in a little bit to clarify. So we get our rundown straight out of this boundary low here, and then we come and find a new low, spike back up to retest, and then we come back down, hold once, but then it's broken and retested, but then it's not really respected. For things like this, where it's something that's a little iffy, where I would still want to keep it, because you could see that it's tested numerous times, and the wicks try and close above, the bodies never do. And you could make an argument that this would be, given these wicks up, this would be an area that you'd look for. This would be maybe where I'm starting to look again for that zone, because we've given enough clearance and we're out of that boundary low. So I would consider making this a support and resistance zone, where I take the low of that wick or that body there, and I find the high wicks, and I just incorporate that. So now we've got a little zone. I would keep that level there, and then this is kind of opposite what we did over here, where we extended the zone down and gave ourselves the zone to extend to the wicks. Here we've got the zone established, and you can see it holds, but we've got some interest down below. So instead of leaving, sorry, I know I'm jumping a little bit here with my chart. Instead of leaving this level where it's at the body of that candle, we've already covered the body of that candle at the low for that with the zone there. So I would consider extending this down, and at this point it becomes a matter of preference, right? You've got a bunch of levels that you could use as your true low. You've got this wick and this body, but we extend down past it, so I want to incorporate that. This to me just is still, because of the immediate reaction of that bull, like that huge bullish engulfing candle there, that zone still held. So for me, I'm going to look a little lower, and I'm going to use these bodies here, because that incorporates, that manages these wicks. You see here, you get the nice strong reaction off of it, dip a little below, then retest, and then take off. So for me, now we've got a great area of support just below a reversal zone. So if you want to be conservative, then you can set pending orders here, depending on what you're trading. In this case, we're swing trading spot forex, so pending orders. If you want a precise entry on a swing trade, then that certainly gives you the ammo to do so. And once we get more towards fibs, you could see that we would be able to nail down that entry, and we would be able to wait. We get that nice pullback, and we would be able to wait for the fill of this negative 23.6, and even have, save ourselves that extra 30 to 40 pips that it would extend down past it. But we'll get to that at a later time. So now we've got a pretty decent level. And then if you look left, we've got another little range here, and another low established coming out of those levels. So if we continue to look left, I'm going to use, you can see that this really sits at the bodies of these candles, and I did that only because I wanted to make it inclusive. So this is again personal preference. You could either go with the true low at that wick there, and then get that one touch right there, but then the others front run it a little bit. Or if you look towards, if you look to incorporate this multiple tests, the other criteria for support and resistance, and you bump it up a little bit, that still holds. These wicks still hold, but now you get two more additional tests, and then you can see how it extends up just a little bit, but the bodies, this is where the bodies want to close below. That's just a result of incorporating more tests. And then if we look here, it's a very similar situation. We've got almost a head and shoulders with an extra shoulder there. But if you look to incorporate multiple tests, well, where does that happen? That happens really at this wick right here. And I'm comfortable marking that wick because you see that no body ever truly closes below this level if we're looking left. So especially when you're on a higher time frame, looking for those levels that are tested multiple times, in addition to looking for strong reversals on the market, it's safe to look and incorporate multiple facets of each of the story that each candle's and each range is telling you. So you don't need to be super precise, and that's the beauty of swing trading, is that you give yourself that leeway, and you have, right, like, so if we were to enter, if we were to come out of this low here, and we don't want to enter there, absolutely not, there's nothing saying enter there, but we get this 50% retracement here, we enter long at the test of that level. Well, now you can leverage the wick of the prior candle as sorry, it jumped and didn't do what I wanted it to. So now you can use that low. You can get below that, right? So your entries here, you can get below this, and even if you wanted to give yourself more safety, get below that 61.8 as your stop loss, and give yourself additional structure. And if you're trading, like if this is early in the week and you're trading Nadex and you have an option to get in the money down here, that's one time that I would say just collect premium and just get a couple contracts to way down below and feel safe. But you now have a stop out level. So let's take that away. Again, we'll incorporate fibs later in the course. For now, it's just support and resistance. But you can see that we've now got a fairly competent and easy to read markup done all on the weekly. And we could boil down to the daily and add more levels. Like here's another little range high. But you'll see how we can take advantage of intraday levels on the futures market, more so than the or I'll use the futures market as the example for the intraday stuff, and you can carry that over to Forex if you do so wish, and you're trading like 20 to 50 pip gains. That's perfectly fine. I just wanted to outline the difference between swing trading, and now let's go on to intraday stuff. Okay, so we're starting here instead on the daily, because here is going to give us our intraday ranges better, right? Because we could start on the weekly just to check for significant levels in our area. Like for instance here, this would have been a great significant level to mark off. And I've got my, this kind of goes back to that, creating a range rather than just a zone. So we've got one level there and then another that's way up here, but that's way out of reach. So I'm going to take this level and I'm just going to darken it a little bit because that's the color I use for my supply and demand. And I want to make sure that I'm giving myself that separation. Is that going to darken it at all? No. I just don't want to impact my my trading too much with it. So let's try that. Okay, so that's still different enough from the black backgrounds that we can get a good sense. So this would be a good zone to keep on your chart. And that, knowing that we were just testing that zone on the daily, when you look at just basic support and resistance on the daily, you're aware that you're in a strong enough zone to want to take advantage of that. So we'll start to create our boundaries. We'll start to create our boundaries. You can see here that this works with what I was just talking about on the swing trading stuff, where you could have theoretically, that and that, and you could see that both those levels hold for different reasons. And I think that that's a good upper boundary to have. Might take a couple of weeks to get there, but I think that this is definitely a good upper boundary to have. So I'm going to take the low of that wick up to the range low right there. And I'm going to mark that off as another one of those reversal zones rather than just support and resistance. Now, these are very different from supply and demand, and we'll get into supply and demand. But what you're going to realize is that working through this course, I'm going to want you to trade each individual component. Like you're going to, at the end of this, once you send me your markups and your video of you doing this, or your thought process behind doing this, then I'm going to ask you towards the end of week to trade solely off of support and resistance, both identifying a swing and identifying an intraday trade. Excuse me. Okay, so now we can go through and start to mark off areas, reading left to right, right? So now we're in this range. We've broken back into this range. So we don't need to really, at this point, focus on anything up here because this is intraday trading for the indices. So read left to right. We break back into this range. Here's our first low. And here it pays to be a bit more precise because you're looking intraday. So this wick right here, I consider that body holding. I consider this body holding. I consider this body holding. But this is a more precise level, so I don't necessarily want to try and turn this into one of these little zones because we've already got one just above it. So if you wanted, right, and you wanted to get rid of that zone and just use even whittle down your level and use this as your upper boundary. That's again personal preference. It's a smaller zone, which would enter more, which would allow for more precise entries. And so why don't we do that? Just that. We'll take where the wicks kind of start and dip it a little bit lower. There we go. So now we've got a smaller zone, and we'll consider this our upper boundary. I'll go ahead and change that coloring again as to not impede. Okay, so now we've got our our weekly zone. We've got our upper boundary, and we can start to give ourselves more intraday stuff. So reading left to right. Remember, what you're looking for is multiple tests or significant movement. And significant movement for intraday stuff versus longer term is very different. So for swing trading, it was very clear what was a significant move. For intraday, right? Once we break below this level, coming out of this zone right here, I would consider strong movement. And I would want to incorporate this test right here. So I'm going to look for a series of wicks that hold as opposed to this true low, which never really gets retested in a bullish pop. So I'm going to use this wick, this area, and this wick as my baseline. Okay, so I would consider that a significant move. Likewise, you look for this nice bear run after we break below, and it's triggered off of the high of this little channel that's held, right? So we've got a nice little channel here. We use the high of that channel. If the OHLC wouldn't snap. So we've got the high of that channel, and then we've got the low of the channel, and it's up to you if you mark this off. If this were intraday, right, and it were closer to that time frame, and I could zoom back on a 4-hour time frame, I would actually, looking at that, I would have that as a descent, like kind of a squeeze. It would squeeze shut because you can see that the lows are just descending a little bit. So I'm not going to mark that off. And now you look down and we get a nice spike right here. We get the wick right here, so that's a huge wick. Nice little spike. This, I'm not going to mark this off because we'll get into that with supply and demand. But what I would do, you know what, let's talk about that for a minute. So with supply and demand, when you get an area like this where you get a strong, significant move followed by preceded by a strong wick, that would be a supply level to me. So I'll mark that off. We'll get into exactly what that means if you don't already know. But when you're looking at levels like that, I always look for the next wick that pops up within that level. So we've got nice wick right there. So that's what I'm going to mark off. And again, we'll get into that a bit later. I'm going to take that supply level off, but I wanted to show why I wasn't choosing this wick, but instead this wick. And if you have questions about strong wicks preceded by other smaller wicks that you think is a supply zone, by all means, ask. I will just redirect you, or I will tell you, and then we will move towards just isolating support and resistance. So we're reading left to right. So now we've got a beautiful range right here. And I'm going to look for the first level that triggers that range right there. See that range high holds. And then in the middle of that level, or in the middle of that weekly level that we identified, now we've got the range low that holds. And now you've got, this is interesting because you're in the middle of this strong zone right here, right? So here's a strong level, here's a strong level. You can see that this held again. You can see that when we broke it, this held again. You can see that this held as we came down to try and test it. This level is really interesting because it's an area that was tested multiple times, but it was never, so I'm not going to mark it off, and I'm going to disqualify it because if I were to do this, I would have too much in the middle of that zone that I would think is a strong level. But if you look at it, right, so once it was jumped off, once it jumped off, and again, this is a daily, so it's still a fairly significant move, but it's not as significant as what precedes it. Well, once we break through here, right, it blows through it with no rhyme or reason, right? So it doesn't act as support when it's retested again, but instead it is broken and retested. So this is all personal preference. I would change the coloring to make sure that it's not like jumping out at you. I probably wouldn't mark that, but that's just me. Okay, so now we've got all of these levels that have been established. We've got our weekly range here, or our weekly level to keep an eye on. And now we just read again left to right and see what holds multiple times over the course of time. So again, if you remember, daily levels are different than, or intraday levels are different. So if you look here, you can always take stuff off. If you look here, you want to identify how many times it's held. So here's our level creation. Once, twice, 3, 4, 5, 6, 7, 8, 9, 10. There's a whole bunch right there. So while this is, this is very similar to the level that we just disqualified because it slashes through price, you can see how many times it was respected over the, like here's just, it consolidates at that level. Here it takes a dive off of that level. I'm going to leave that level now because it's tested and respected and leveraged so many times over the course of a couple of years that it truly acts. It never really falters. Like yes, it's slashed through sometimes, but more often than not, it's going to be a safe bet, at least for a quick pop. Similarly, if you look here for this nice little bull pop, there's consolidation and it holds, it doesn't hold, it holds. So this is another one of those ones that's personal preference. If you are going to keep something like this that slashes through and doesn't hold as many times as this level, I would go ahead and change the coloring so that it doesn't impact your trading and it doesn't stand out as a super strong level. Same thing for this one, and this one I'm not even going to mark off. This one being, because the lower we go, the less respect it's getting, and you want to find the level, the lower you go and the stronger the moves are getting, you want to find the levels that hold really well. So here's just looking, this is a little bit tough to see on the daily. Just looking left to right, you can see that here's a little range high that then triggers these levels right here. And there's not much else around there, so I'm going to leave that level for now. Just because there's not much else around there. If there were a stronger level for me to pick, then I would. But you can see that this I would still technically consider, because we're on the daily right now, I would consider strong support and resistance, or not strong, but decent support and resistance. And then the only other one that really jumps out is the true low right there. This you could make an argument for, so we'll just put it there and change the color. But now we've got what I consider looking left to right, and we can add, this has got enough distance that I feel safe adding that. Excuse me. Now we've got enough distance that that would be considered, or we've got enough marked off that we could consider ourselves in a, with a daily, or with a good intraday range. So what I'd do at this point is you could do one of two things. You could save this drawing set. I don't like drawing sets. I hate what Thinkorswim did. You could save this drawing set, or you could do what I do, and I just keep a notepad. I'm not going to save this off on my notepad. I have too much on there already, and I need to clean it up today. But just share the flexible grid with yourself, and then when you go to paste it, you paste it on the notepad and just annotate, say what it is: daily markup, support and resistance on SICAD. But now we can take our little bubble that we're in, identify kind of our boundaries, and so now we could because we've already got this markup as it sits now saved off. So I'm going to change this as our boundary low, and we'll make this for now our boundary high. So now if we zoom in kind of to that little area that we've got, we can start to make this a bit more concise, right? So we've got, actually let's leave this. Now we can look within this boundary. I'll even change the color on it just to clarify. Okay, so here are our boundaries. Now you can look within that boundary. So look for your lows, look for your areas of multiple tests, and now you can create more of an intraday blueprint. So reading left to right. There's a little low right here that jumped. That holds a couple of times here, is front run here, then retested a bunch of times here. So we are on the intraday stuff now. So I'm going to change this to, let's do a pale yellow. And just identify that on daily levels now. And all we're going to do is just continue to read left to right for what's in the immediate past. So here's that reversal zone on the weekly, and you can see this is where it spikes down to on the 4 hour and gives us a nice strong reaction. And now you want to consider getting a little bit more precise. So you can see that my price level jumped and tried to snap. I don't want it there. I want it at the true low. Reading left to right. And it's okay if at this point you start to get a little bit, I don't want to say messy, but you start to get a little bit congested, because you want that. When you're trading intraday stuff like this, you want your next stop. Okay, so I use this and I use this, and keep in mind this is a 4 hour chart, so this is still a decent bit of distance. Reading left to right. There's a nice little low, tested multiple times. And now, again, reading left to right within those boundaries. Here's the last piece that I would truly look for. On the high side, then we dip lower and we find our range low. And so now you've got, is there anything? Yeah, multiple tests. I guess I didn't start left enough. I started from the dip down, but I didn't look left enough for the move up. Yeah, one more. Okay, so now you've got on the 4 hour, a great little blueprint for intraday stuff. And you can see that by changing the colors, it doesn't become too cumbersome, and you want to choose colors that are still pale enough that it's easy to read. Everybody's eye is different. I saw somebody post a white chart. I can't look at a white chart. But now we can go down to the hourly, and we can start to do something very similar, right? So we can look, let's see, how far can we zoom? I want to look at our hourly boundaries here. And you can see that how much it uses these as a staircase. It works really well. You build yourself that ladder. It starts to look very formulaic, and it starts to look very measured. But now we can look left to right and start to, we'll use this because that creates a little bit of a zone. And you can start to incorporate shorter term moves. Short term bear pop, right? Ping pongs between levels and spikes back up, takes a dive right to the next levels. So I'm going to use that, and once again I'm going to change so that I know what I'm looking at. And it works really well if you have a set color block, like color scheme, that you use every time. So one color for weekly, one color for daily, one for 4 hour, one for hourly, and then I wouldn't mark anything up below that. But that will, make it pretty seamless for you moving forward. So we'll use that light purple as our hourly candles. And this is again where you can get a little bit more finite with your levels, and you can get a little bit more congested on the chart, because now what you're looking at is these areas, for the most part, that offer some decent tests are going to be tested multiple times. So you're building yourself another little blueprint, and you know where the stronger levels are. So really all you're looking for when you're trading, especially on intraday stuff with futures, and you can leverage this with Nadex, like short term out of the monies, this is gonna become imperative, is you can start to look for, because you know what's strong at a strong level, right? So you come up here, you break this level, and you come back and retest, this hourly support here, and you could even mark it off a little bit lower, right? So you've got some more hourly there. So we have you don't want to step in front of the bulls and try and be a bear here. You don't want to try and be the smartest person in the room and figure out where the reversal is going to happen. Take advantage of this run up. So you see this nice run up, you break out of this weekly reversal zone, you know there's strength there because that is weekly. You've got your weekly levels that it broke through. You've got some daily levels that it broke through. And now, so we break up to another daily level, come back and retest, or another 4 hour level, excuse me, come back and retest. Well, you're on an hourly chart, grab an out of the money daily up around here, or enter long on your futures here, and you have your next stop, right? You want chunk plays. You don't always have to hit the home run. You don't have to go for a 300 pip trade if you're, let's just say the NASDAQ, right? If the NASDAQ moves fairly quickly. So we break above this level, come back down here, and let's say that moves 20 points to 50 points in the matter of 2 hours. 50 points at, let's see, 4, so that's 200 ticks. So that's $1,000 move right there with one contract. So you don't necessarily have to hit the home runs, but instead go for your chunk plays and don't give anything back, right? Hit a double. Don't try and stretch it into a triple. Come down here, and here's a little 15-yard pass that's going to net you a first down and another opportunity. Sorry, sports analogies are kind of what I do. But so you enter long here. Here's your target. We break past it. Great. Wait for a retest. Enter long again, and then you have your next target. We break south, which we did. Enter short here. You have your next target, and just ping pong levels. So this is going to become imperative once you figure out how, what's easy to read for you. And that's what's going to be important is you want this this support and resistance markup to be easy to read. That's very important. I don't care how it looks to me. If you can read it, then that's what matters. So what I want you to do is go through, mark up on a Forex pair, mark up some swing trade stuff, some swing trade support and resistance. On a futures pair or a futures index, whatever it is, mark up intraday stuff starting on the daily and whittle down to the hourly, and give yourself that blueprint. I will share these charts, this flexible grid, in the pin post or in the assignment post, excuse me, and along with this video. And then please comment on, just share your flexible grid onto the pin posts, or not the pin post, excuse me, I'm sorry, it's still early. Onto the, share this onto the assignment post and share your grid. And if you can record a video, I please do, because it will help us drastically in terms of your thought process, and then we can discuss this tomorrow. We can discuss any questions you have about the difference between swing or intraday, or what you're looking at, how to do it, etc.